Hello, hello! Jamie Trull here, your favorite CPA and financial literacy coach. And today we're going to be talking a little bit about inflation, specifically as it relates to business owners. Okay, so I've had a lot of questions coming from business owners about how to handle this period of rising inflation. This is something we haven't seen in a long time, and I'm going to show you actually some stats about inflation. And I'm going to give you 5 tips for business owners specifically to, help your business survive through rising inflation and to stay profitable. Okay. Now, first and foremost, I'm going to give myself a little bit of a plug because I'm pretty excited about something that I wanted to announce. So the basis of what we're talking about today is actually what was just published in my new Forbes article. So I am one of the Forbes council members. I'm on their business council, and that has been a very exciting thing that happened in 2022. And my first article was just published on Forbes. So we have included the link to that, of course, because I want you guys to go read the article and I would love for you to share it around. But we're going to talk about the things that I talk about within that article today here on YouTube as well. So let's talk about why we're talking about inflation to begin with. Well, at the end of 2021, beginning of 2022, we have ended up in a situation where we have had inflation that has exceeded about 5% for the first time in a lot of years. And I'm going to show you the stats to go along with it. But most of us, a lot of you, haven't been in business at a period of time that has had anything near this level of inflation. And so everyone's trying to figure out what the heck to do. We're also dealing with supply chain issues and various different things going on out there. And so we're going to talk a little bit today about what you should do as a business owner. What can you do? Are we going to expect for this to continue? Or is it potentially going to be something that reverses course? We're going to look at some stats and I can give you some thoughts on that. So jumping into tip number 1 from my article, I want you to resist the urge to wait it out. I know a lot of business owners have thought, okay, this is going to go back to normal at some point, right? Our prices, maybe they're just increasing, in the temporary, and eventually things are going to normalize. And not to say that things won't normalize, but more than likely, based on the data, which y'all know I love data, right? Based on the data, it is unlikely that we will see this inflation actually reverse course. Now, it may not continue at these levels, or it may, we don't know. However, the idea that we're actually going to have negative inflation is pretty much not something we can support historically. So I'm going to show you a few stats that I pulled up. Now, you can see on the screen, I have all the different inflation numbers. I've gone back to 1940, and we can scroll all the way down and see all the way through 2021 when things started to rise again. Okay, now you can see through 1940, I've highlighted in red everything that was over about 4.5% inflation. So that's relatively high inflation, and sometimes very high when we go all the way back to the 1940s. We had a period of high inflation in the 1970s into the early 80s as well. You can see there were a few double-digit years of inflation in a row there, if you can imagine. And then things kind of start to normalize from about 1983 on down to where we really haven't seen this. So again, a lot of business owners have not seen this type of inflation in the time frame that you have had your business. And so this is new. So again, we're at 4.7, which feels really high. We've been talking quite a bit about it. It's actually higher than that if you look at 2021 into the beginning of 2022. Some have quoted about 7% over a year. But if we're looking back, we've had a heck of a lot higher. And if you can look in the 70s, there were actually multiple years in a row of this type of inflation. We don't know what the future holds. But what I can tell you is I can look back through here and you can see I've highlighted in green every year that actually had negative inflation, i.e. you had inflation and then it actually backed off. Things actually got cheaper again, right? That means we had a decline in these CPI numbers. So this middle column is the CPI number. Now you can see when we scroll back, right? We had a slight decline, if you could even call it that, in 2009. And then the next one, we have to go back quite a ways to 1955 to see yet another very small pullback in inflation. And in 1949, we had a 1%. This is actually the biggest decline we saw was right around 1%. For those of you who are thinking, hey, let's wait around, maybe it's going to get better, maybe things are going to normalize, it is unlikely after a period of inflation that we actually see deflation when you look at the numbers. So if you've been waiting it out, if you've been holding out on raising your prices to compensate for the fact that your costs are rising, then you are potentially shooting yourself in the foot. I've also, just to kind of show it a different way, I've shown the CPI graph here, you can see, where we've graphed out CPI, right? This is the Consumer Price Index from 1941 to 2021. And so what's interesting about this is that in that roughly 80 years, right, the cost of things has increased about 20 times. And certain years more than others, right? Sometimes we see some pretty high, rising like we talked about in the 1970s. But overall, from 1941 to today, something that was $1 in 1941 now costs $20, right? So think about the fact that the trend is upwards. Number two, if we don't expect, right? If we don't expect for changes to happen, for us to go back to quote unquote normal, right? Of a couple of years ago, what do we do then? Well, the first thing that I want you to do is to review your profit margins, specifically your gross profit margins, on a product or service basis. So what that really means is understanding the direct costs that go into those products and services. So you're going to need to sit down and do that analysis. If you've never done it before, it's going to take a little while, but ultimately you're going to figure out, what are my gross profit margins? And I would actually compare what were they, maybe pre-pandemic, maybe before this inflationary period, and what are they now? And you can see whether or not your profit margins are still healthy. If you've not adjusted your prices, it's unlikely that you have the same profit margins that you did, call it 2-3 years ago, right? So sit down and do that work to figure out what your profit margins actually are, and are they sustainable? Are you going to be able to stay in business with those types of profit margins if we do see continued inflation? So on to tip number 3. What else can we do in a period of rising inflation? Well, we can look for opportunities to save. Oftentimes, we're not actively looking for those opportunities, maybe really spending time digging into our costs, especially things like our overhead costs, right? Maybe bidding out our service providers, maybe going back through, the various different costs that we have within our business to figure out if there is anywhere that we can save. Maybe it's software solutions. It could be with providers that we are using and vendors that we are using, right? It could be just looking at, what do we really need within our business? What are we really utilizing, and what are we not utilizing? But this is a really good time when you are seeing a period of rising inflation. It may not have mattered so much before, but as costs begin to rise, you may start thinking about the cost benefit of keeping those costs. Are they still providing you a return on investment? If things are getting more expensive and you're really not utilizing them, it's probably best to go ahead and cut those expenses. That can help you so that you maybe don't have to raise your prices quite as much or quite as quickly as you otherwise would have to in order to save your profit margins. Maybe going out to suppliers and doing new bidding programs to have them bid. Maybe just looking for any and all opportunity for cost savings. I typically start with my bank statement or with my P&L and go down line by line and figure out, okay, where might I be able to find some cost savings? And oftentimes cost savings are not just in the moment. Those are things that will pay you dividends over time, right? If I cut a cost and it's a recurring cost, I am not only saving costs today, I'm saving costs next year and the year after that into perpetuity. So it's typically going to be worth your time to sit down and spend some time looking through your costs in detail. I know it doesn't sound fun, get your coffee ready, but it is worth it. So step number 4, in order to survive inflation for business owners, I want you to have a process for increasing your prices. So that means we're not just looking at it on a occasional basis, right? That we have a process, that we have some triggers when we know it might be time to increase our prices, and we have a good way to be able to do that that isn't going to upset our customers on a frequent basis, right? So we want to make sure that we are checking our profit margins after we've gone through that cost control, after we have looked at our gross profit margins. If we are still seeing those declining profit margins, then it's probably time to do a price increase. And you can decide whether you do that on, new clients and new sales, or also implement it with older clients and older sales. But what I want to recommend is that people aren't constantly changing prices. So you want to constantly be monitoring profit margins, but you don't want to be implementing pricing changes all the time, because from a consumer standpoint, that's usually something that drives us bananas, right? When things are just moving around constantly. So it can make sense to do maybe one big shift up, giving yourself a little bit of wiggle room, a little bit of margin for if prices continue to increase, that you're not going to have to do another one. We don't want to kind of be behind and trying to catch up with those changes in pricing. We want to try to think about what would happen if prices continue to change, so that we can make one big price change and then we don't have to do it super soon after that. But we do want to make sure that within your business, you have a process, you have a time frame to be reviewing these profit margins and knowing sooner rather than later when you need to make changes. Okay, oftentimes we wait far too long to make these changes and it comes back to bite us. So I want to make sure that you have a process, that is something you are routinely doing or someone within your business is routinely doing, and you have some flags for when you know it's time to raise prices so that you don't get into a cash flow crunch down the line. And my fifth tip, and arguably the most important for business owners to remember, is to resist the urge to be a martyr. Now, some of you have been arguing with me when I talk about price increases and passing on some of these price increases to your customer base, because perhaps you want to be able to help your customers through difficult times. And sometimes it absolutely makes sense to accept smaller profit margins in order to help the people we serve through difficult times. I absolutely understand that to be the case. This was something that happened in the pandemic. A lot of people did put off these price increases because other people were having a difficult time and they did not want to add fuel to the fire in the midst of that. However, we don't need to be a martyr. It is misplaced if we think that we're just going to, have to deal with everybody else's price increases, but we are not going to do it ourselves. When that happens, our profit margins shrink, oftentimes to the point that our business is no longer viable. And if your business goes out of business, how are you going to be able to serve those people that need you? It is your duty as a small business owner to actually be able to run a business that is profitable, that is sustainable, right? Profit equals sustainable. You're not going to continue in business if you aren't making any money. That's the purpose of business in large part, is to help people, but also to make money so that you can run your business. So that is super important to me that we talk about this, because I think that sometimes we feel bad. We feel bad when our prices are increasing, passing that on in any way to our consumers. And I'm not suggesting that we do this in an irresponsible way. I definitely don't suggest that we exploit this. I think that there are people that do that. So let's kind of set that apart. But I'm talking about maintaining profit margins that are sustainable and making profit that helps to feed your family, that helps you to be able to give back to your community, that helps you to be able to employ people within your business to feed their families, right? That's what the economy is based off of. And if small businesses don't step up to the plate and make sure that they are running sustainable businesses, then they're going to not make it. And that is the fabric of the communities in which we live. Quick example of this is maybe you do weekly services and you're thinking about increasing your prices by $5 a week per customer. And maybe that's a 5% increase to keep up with inflation, right? Maybe you charge $100 and you're going to charge $105 a week. To the customer, that's $20 a month, right? That's $20 a month, $5 a week. To you, if you have, let's say, 100 customers, right? Let me make sure I'm doing the math right. That's about $2,000 in extra revenue for you in the month. So what costs your customer $20 probably isn't going to be, injuring them in any specific way. It's not going to cause a significant impact to them, but it will cause a significant impact to your business when you add that up and add those customers together, and the impact of that, and being able to then employ people, pay them fair wages, right? To be able to pay yourself fair wages, all of those things. Avoid being a martyr, make smart decisions, look for places that you can cut costs like we talked about, but don't be afraid to raise your prices if and when you need to. Because otherwise, if we do continue into a period of inflation, it's the businesses that don't adapt that are not going to be around, right, after the fact. So we can see that in the history where we've had periods of rising inflation that has lasted. And I guarantee you there were plenty of businesses that did not stick around during that time period because they didn't adapt. They waited far too long. So don't be the martyr. Do what you need to do to have a strong and healthy business. and continue to watch this channel. I would love if you got value out of this, or if you just want to celebrate the fact that I was in Forbes and give me a big hug. The way that you'd give me a hug virtually is to subscribe to this channel. So if you found this helpful, if you enjoyed the content, if you want to see more from me, definitely subscribe, share the content around, go check out the Forbes article, share it with your friends if you think it's been useful, or share this video around. I very much appreciate it, and go check out the rest of my content. I'll see you next time.